Greetings, crypto tax fans. Today, I'm just going to do this quick video, famous last words, but crypto tax classification. One of the fundamental rules of the UK tax system is we're not overly concerned with what asset is being dealt with. It is what we do with that asset. So it ain't what you do, it's the way that you do it. And that is the same for crypto as it is for buying and selling shares, buying and selling property, whatever. And our key distinction will always be whether something is non-trade, so effectively an investment, or whether something is a trade or not. And that depends on what we do with the assets. Today we're going to look at this first category, non-trade, as it applies to crypto assets. So let's just put that there. So non-trade. The first thing I'm going to look at is perhaps the obvious one, investment. So this will be the default position. If we buy and sell crypto assets, that will be the presumption that our activities are an investment rather than a trade. That's a rebuttable presumption, which means perhaps HMRC could come along and say, hang on a minute, your activities are a bit more deliberate and organised and commercial than your average investor. We think it is a trade, but the general position will be that everybody will come at this as if your crypto profits are capital gains. So investment means that the profits are subject to capital gains, which probably means that you're going to be taxed at 18% or 24%, depending on whether you're a basic rate taxpayer or a higher rate taxpayer. You have an annual exemption of 3k for 2024, 2025. It used to be much higher. It's a shadow of its former self. It's not really worth writing home about anymore. And obviously, sorry, that's a bad habit. I shouldn't say obviously, but if we have any capital losses in the current year, or we've had capital losses in previous years, we're still carrying forward. Make sure you keep putting them on your tax return, and then we can use those capital losses against capital gains. So not much else to say about investments. A couple of other points I'd like to make though is myth busting. So myth number one: are my crypto gains gains on foreign exchange? Now, this was one of the first myths, I think, perpetuated by HMRC. They did a paper way back in 2014 on Bitcoin and how Bitcoin was taxed, and that was one of the things they put in, that essentially profits on Bitcoin should be treated as a foreign exchange gain. And that was pretty loopy even back then, because the reason why they flagged that up was because essentially if you have a gain on the exchange of foreign currency, which is used for personal expenditure abroad, then those profits are tax-free. But it seems incredibly unlikely that even if Bitcoin was somehow a foreign exchange gain, you'd fit into that narrow definition anyway. But thankfully that myth has now been busted, so we'll put a nice red cross next to that one. So the other myth is whether profits are essentially gambling profits. Again, this comes back to that 2014 paper I mentioned, where HMRC set out, I paraphrase, but it won't be far wrong, I don't think, that the gains on Bitcoin could be so speculative that they are not taxable, and the losses are not allowable because they're effectively the profits from gambling. Now that's a really narrow exemption. It is obviously an exemption for gambling profits in the tax code generally. Even a professional gambler will not pay tax on their profits. But it's the legal definition of gambling is pretty narrow, so it involves betting and wagering, and it's difficult to see how HMRC could really come to the conclusion that making a profit or a loss on Bitcoin could ever be within that narrow definition. So I think despite the dead body of this myth being resurrected briefly by, I think it was a Treasury Select Committee who decided for whatever reason that crypto should be regulated as gambling, that was firmly kicked into touch by the government, that suggestion. So I think we can dig a hole and bury that, as they say in Yorkshire. So there's then one other little nugget it's worth just talking about now. I won't put the myth actually, but speculative financial transactions. So there's a case called Louis Emmanuel which actually suggested that there is a class, or certainly back when the case was determined, which was quite a long time ago, it has to be said, that there was a class of financial activities, riskier financial activities, which, although falling outside the narrow definition of gambling, so not wagering, not betting, they were so risky that they could fall essentially within